Hello everyone, it's Friday, August 7, and today we will analyze the charts for the euro and the pound sterling to assess potential market trajectories. Yesterday, both the European and British currencies declined against the US dollar, as they lacked the momentum necessary for further gains, particularly ahead of the release of crucial US jobs data. In addition, the euro area faced pressure from the disappointing retail sales, which fell by 0.3%. In contrast, the US reported positive figures on initial jobless claims, which increased at a slower pace compared to the previous week, prompting traders to favor long positions on the dollar. However, recent ADP data revealed weaker growth in private employment. This suggests that while employers are not laying off workers, as evidenced by the low number of jobless claims, job creation remains stagnant, indicating a degree of economic uncertainty. Given these developments, it is prudent to closely monitor the important reports scheduled for today. Turning our attention to the macroeconomic calendar, Germany has already released data on industrial productions and trade balance, while the UK has reported figures for the house price index. The spotlight is now shifting to the US Nonfarm payrolls, with Kevin Walsh, the new Fed chair, pursuing a less predictable communication strategy and providing fewer forecasts, particularly concerning future interest rate trajectories. Data on US inflation and labor market conditions is increasingly critical for traders. Today's July jobs report is expected to garner significant interest. The unemployment rate is projected to be 4.2%, and non-farm payrolls are anticipated to show an increase of 85,000 following a 57,000 gain in June. Notably, this indicator has been declining since March, and today's report is anticipated to mark the first increase during that period. If the figure comes in weaker than expected, it could indicate a need for the Fed to cut interest rates, in contrast to the stance taken by three committee members advocating for a rate hike at their latest meeting. Conversely, if the data proves to be positive, it may bolster the case for raising rates to combat inflation, which would likely support the US dollar in late trading today. Now let's move on to the technical analysis. The 1-hour EUR USD chart may rise to approximately 1.1541, where bearish pressure is likely to emerge. A false breakout at this level could present an opportunity to open short positions. Also, the weekly high at 1557 may serve as an entry point for selling on a false breakout. Short positions on a rebound could be considered around 1592 in case of the euro's rally after the release of US non-farm payrolls, counting on a decline of 30-35 pips. On the other hand, long positions might be relevant in case of false breakouts at 1504 and 1482, or on a rebound at 1.1457, targeting a move of 25-30 pips, provided the US jobs report is positive. Regarding the British pound, the trading setup is quite similar. Buy entries may be considered at the support level of 34.44 on a false breakout, with an expectation of a bullish correction to 34.74, where selling pressure is likely to increase. A false breakout at this level would trigger a sell signal. In the event of disappointing non-farm payroll data, sterling could rally to 35.03, potentially extending gains to 35.39. At this level, I would recommend opening short positions on the rebound, targeting an intraday correction of 30-35 pips. Short trades at 35.03 and 34.74 should only be considered after confirming a false breakout. If the US dollar strengthens and the pound-dollar pair slides below 34.44, It would generate a strong sell signal with the potential for sterling to dip further to 1.3419, where buyers may enter the market in a false breakout. Taking long positions on the rebound would be appropriate at 33.93, anticipating a move of 25-30 pips. Good luck to everyone and have a great weekend.